Okay, folks, welcome to Sunday Night Futures Live, another episode. Looking forward to a new trading week. We have our first weekend of Sober October in the books. Tomorrow the will be week number one completed. Technically, today is because I started a day early, but feeling good. I've been hitting the gym, no booze, no carbs, intermittent fasting, and down just shy of, I'll probably be down 3 pounds tomorrow, but about this morning, 2.6 pounds. I should be down more than that tomorrow morning. So feeling good. Hope that you folks that joined in, I know, who was it that joined in? Jody. Jody joined in. Our lady friend Jody, the lovely Jody, and hope she's doing well. Okay, let's begin. Well, before we begin, what did I want to say? What did I want to say? Like, subscribe, and I think that. I remember. I did. I did best stock charts for the new trading week, and it's posted on YouTube. It's posted on Twitter. So please check it out. And let's share my screen, and we'll begin with an audio check to make sure that you folks can hear me. My mute is not on, and let's share this out. Okay, good. So we have Jeffrey. Welcome aboard. Jeff just joined the community. Franklin, welcome. Bob and Crew, good evening to you, my friend. Sean, good evening to you. Welcome. Thank you. Thank you very much. I'm so used to pointing over here because I changed the camera position. So I'll probably do that a few more times. Sam, I believe that this is the female Sam, not the Italian male Sam, who I confused her with a couple of weeks ago. So I misgendered her, and I apologize. Don't forget to like the stream. Thank you, Sam. Helps the creator, and it's free. Yes, it is free. Great point. Excellent point. What is the Twitter name? My Twitter name is @contrariantrade. @contrariantrade. As a matter of fact, do I have the links below? No, they're not linked below, but it's @contrariantrade. It's pretty easy. Just take the R off of trader. I love the picture you selected for the public forum. Those shipping containers say it all. Many sectors in the market that we trade. Yeah, good point. Yeah, thank you. That was actually AI generated. That's a real picture, but the background, the forum that I use, it's cost me a lot of money, and I was able to just AI generate a lot of the imagery that was on the website or on the forum. So yeah, pretty good stuff. So that reminds me, I don't want to pitch too much here, but I do want to remind folks that link below. If you're not a member of the community, it's free, no credit card required. I put up here what charts do you want me to review tonight. List them there. It's under the feed. So when you log in, just go on over the feed. And over here, we have the Bull and Bear banter. That's the chat room. Just click over there. Make sure you introduce yourself, please. And of course, in the Trend Spider space, I posted in the chat area and in the Trend Spider home area 2 spreadsheets. These are Google Docs. You can open them up. Anybody can. I posted 2 spreadsheets of searches that I pulled out of Trend Spider, and therefore Bollinger Band squeeze setups. I went over a few of them, only 5 last night on the software sheet, but there may be some on there that you like. If you have a small account, you're looking to play a small dollar stock. I usually lean towards the higher dollar stocks, but maybe there's one on there that you like. It's free. Check it out. And as I promised yesterday on best stock charts. I also did a poll of Bollinger Band squeezes, and there are a lot of them weekly time frame on the S&P 500. So go check them out, free of charge. There's a link below, and you get in free. Again, no credit card required. Let's get to it. Let's talk about. I'm looking at soybeans here, and I'm looking at them for a reason. They got beaten up really, really bad on Friday. I don't know if they're open right now. I don't think that they are. I don't know what time they do open, but I put a bid way down here to get filled because that would represent weekly support. I can go to a 4-hour chart. You can see it right here. So there's where my bid is. And if they gap it up and they close it above the support level, I may get long of soybeans. We did it twice last week, but you need to wait for the setup here. If you're trading commodities, if you're not waiting for the setup and putting stop loss in, you're going to lose your shirt. But if you're disciplined, you're going to wait for whatever you're trading to come to you at a good support level, really good support level. Or if you're waiting for a breakout and to close above that breakout point, ideally a higher low and you get a higher high, you can make some good money. We did it with natural gas. We did it with soybeans twice last week. So, yeah, I just do it for fun. So let's get to it. Soybeans are not open. We'll check back in. As a matter of fact, I'm going to do this to alert me whether or not, or when they do open up, I'm going to put an alert right here. We are going to strangle the closing price. And if they gap it down, we will get alerted. So we're good to go. We're big shots here. We trade commodities too. Okay. Now, you can see here, if they hold this, this is a nice W formation. So here would be a good support level, but they just may take out all the stops below here, drive it down to support, and hopefully I get filled at that support level, and then buyers come rushing in. So that's why I put an advanced order in, so I don't have to watch it. I know exactly where I want to get in. If I don't get filled, I'm not going to worry about it. So more to come on this trade if we get filled. All right, let's go to the equity markets. Let's drill down to a 5-minute chart. And let's talk about the futures action. And we are going into the week fairly bullish on the market, and we're opening up on the S&P 500 up 0.11%. Thank you, Sam, for following me on Twitter. I didn't know my face was blocked. Not that it hurts. Thank you very much. Wrong pipe. Excuse me, folks. Hold on. Okay. All right. So good open here. Not a ton of volume, and you're not really expecting a lot of volume here. Let's take a look at NQ. This is the NASDAQ 100 on the futures, and they're up 0.07%. RTY, that's a small caps. They're up 0.26%. I'm surprised at that. I'm very surprised at that. That tells me that yields may be down. Let's see if I'm right. Usually when I say that and I haven't looked yet, I'm wrong. But sometimes I get it right. Come on, Bob. What am I getting wrong here? Oh, duh. Okay, we have yields rising here, and I'm very, very surprised that the Russell 2000 is rallying. I would be concerned were I long of the rut right now, the Russell 2000, I'd be worried about a fade. Let's go back to that chart, because if these yields press up higher, it's not going to bode well for the Russell 2000. It's already broken a support level. My guess is that this fades. Yeah, an ascending wedge formation. We drifted out of that wedge formation. My guess is that we fade. We'll see if I'm right. I wouldn't trade it right now, though. YM. This is the Dow Jones Industrial Average, up 0.11%. So, as we kind of predicted, we expected a good open here this week. We reduced the size of our short position measurably on Friday by half. The rest is, for the most part, hedge. We're still slightly, when it comes down to our short of the Qs versus our hedge, we're slightly net short. However, we have a bunch of other long positions to offset that short position. So portfolio, all in all, net long at current. So hopefully this market presses up higher. We're going to go still do the usual thing. I'm going to admit that, we broke out last week. We're going to go over those charts in a moment. We had to admit that we were wrong early on before a small loss becomes a big loss, that we need to lighten up. And that's exactly what we did. So if we get a pullback this week, I'm probably going to take the rest of the short off the table. Now, let's take a look at the US dollar. The dollar is up. The however here on the dollar is, I will warn those folks that are out there betting for a stronger dollar, and it may just head up stronger. We are trading above. I'm going to change this to a 3 standard deviation Bollinger Band. This is a daily chart. Now, Thinkorswim does not calculate in daily price action pre and after hours trade. So right now, this is Friday's price action, not reflective of this gap up. And what do we do on Friday? We tap the 3rd standard deviation Bollinger Band. What does that mean? We're not supposed to be there on a relative basis. So does that mean that we're going to crash? No. It means that we can just trade sideways, take a pause for a couple of days, maybe a pullback, and then we move up higher. So beware of that being a problem. We're probably gapping right up and into that 3D Bollinger Band as we speak. Let's bring this back down before I forget to a 2 standard. Okay, now let's segue over into the commodities space. Let's bring up gold. Gold had a rough week last week. It is up at current, consolidating here. If you get a pullback in the dollar, you're going to get a rally in gold. Let's check out silver. Silver, oh wow, silver up nearly a half percentage point. This is breaking out. Let's check in with palladium. I own palladium. We're breaking out right now on silver. Where is palladium? I think it's No, it's platinum. PL is platinum. What is palladium? I own the ETF. I'm not sure what the symbol is for palladium. I will find it though. Here it is. PA. All right, palladium up. Wow. Really nice. Palladium up nearly 1.5% at current. We have a bit of a Bollinger Band squeeze forming. This is only a 5-minute chart though, but still bullish. Looks like we're going to take out the highs in a moment. Platinum up 0.5%, 0.05%. Sorry about that. Copper, industrial metals. Wow, copper prices are moving up higher. China was closed last week, so what we may be seeing is a bit of a resurgence in the China trade, and they obviously are pumping a lot of liquidity into their markets, helping drive up equities and stimulate the economy. So that's going to put a bid under Dr. Copper. Let's check out CL. This is light sweet crude, which is gapped down here by over 0.75%. Had a pretty strong week last week. The energy stocks did very, very well last week. A lot of them are on my screen, but they're kind of in front of their skis right now. Palladium just broke out to new highs. So I would wait for them to pull back. I mean, even names like Oxy rallied, the XLE, the ETF rallied really, really nice. But again, I think they're over their skis right now. We need to pull back. We need retest, go through that nonsense. And I shouldn't say nonsense. It's a good thing. It's a really, really good thing. It's a validation of the breakout if they're able to hold prior resistance levels, which should now act as support. Now, moving on to natural gas. As I mentioned, we did a swing trade last week on natural gas, but it's faded in the back half of the week. Now natural gas is down, 2%. But I got to say this: natural gas is what you call the widowmaker of commodities. I mean, to me, I'd be looking to put on a trade here. I think that in all probability, it's going to move up higher longer term. Right now, a little bit of pressure, to be fair. Let's go to, we did the Dow. Let's see what happened to the Russell 2000. That didn't fire off, that alert. I want to see whether or not it broke out. It did. Why did my alert fire off? As I put it below, not above. Okay, now that makes sense. What else do we have here? Okay, silver just broke out to new higher highs along with palladium. So it looks as though the precious metal trade is back on the table. I mentioned a couple of weeks ago that gold had hit a major resistance level. I think it was on a weekly time frame. Yeah, we were pressing an upper band of resistance, and we had it on the charting software. The chart. Let's remove all this stuff. We got a bunch of people joining the forum. Good stuff. Please, when you join in the forum, there's a link. I'm going to share this with you right now. There's a link right up here. If you have trader buddies that are out there, go up here to the head. There's a link. Share this out with your friends. Get them to join. The first person that reaches gold level, which is where I am, gets a free 6 months membership to TrendSpider. But you got to get up to the gold level membership. First one that does it gets the 6 month free trial of TrendSpider. Let's go to back to the futures. All right, let's just check out really quick. I want to go to ZS. I don't think it's opened up yet. No, it has not. Okay. What else do we want to look at? Oh, ag. Well, we already took a look at soybeans. Soybeans on the week last week. Let's go to the weekly view, which is what we normally do. On the week last week, we had a reversal bar. Not great, but the primary trend at current is to the upside. So there'll probably be some volatility this coming week. Momentum, as measured by Stokes, continues to rise, a little bit of flattening there, and volume did roll in a bit heavy to the downside. Friday was a bloodbath for soybean buyers. Back to a 5-minute chart. Let's check in with wheat and corn. Corn is open. I don't know what's going on with soybeans. Wheat on the week last week managed to close up, but showed a topping tail. So what we may be doing here is consolidating, maybe get a pullback and a higher low, and then this becomes your weekly pivot point. And then after you get a pullback and you break out above that pivot point, it's going to be game on. You're going to have a rip your face off rally if that happens, meaning a breakout above this upper band of resistance. Because traders are looking. They're looking for higher lows. And this is not looking too shabby right now. So let them press it this week. Let them reverse it, offer support. And then once they take out last week's highs, you're going to see a rip your face off rally on wheat. Okay, let's take a look at corn. Corn did a breakout the week before last, continuation move up higher last week. But again, I think that we need to see a pullback this week, a retest of support. And then, of course, this becomes your pivot point. Okay. Let me just scroll through, make sure I didn't forget anything. I don't think I did. Oh, I did forget live cattle. Always got to worry about my New York strip. I can't believe they broke this back out. Right now, live cattle is telling you, the live cattle market is telling you that Camilla is going to win. If I think that if the market sensed that Trump was going to win, I think that cattle prices would be dropping like a rock, but they're not. And I hope I'm wrong. I really hope I'm wrong. There is a shortage of beef down in Brazil that may be impacting the market prices here. Our cattle stock is the herd of live cattle here in the United States is at its lowest point since 1965. So if you're thinking about shorting live cattle right now, don't do it. Falcon, been a while. Where you been? Good to see you. Hey, Bob, why do you think lithium spiked on Friday? It had a tremendous amount of volume and upward momentum. We'd have to take a look at the chart. It could be technical. It could be China. I'm not quite sure. I couldn't answer that. I don't know enough about the the lithium market to give you an educated answer. The only thing I could go to is A, seasonality, B, the technicals to identify what could have prompted that. So I'm not exactly sure about that. All right, let's take a look at events that took place over the weekend. Folks, you're going to need to fact check me on this because I don't know whether or not this is accurate. This is posted by Douglas McGregor. I believe he's a general, but fact check me. Breaking Beirut is being destroyed by Israel, blah, 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 blah. I hope this is not true. I don't want to see people dead, innocent people. But when I click on this, now it's, no, see, now it doesn't exist. That's what happened before. So that's why I'm saying fact check me on this news print. I don't know if it's, maybe he just reposted something that was false. I have no idea. But the reason why I share that is that you would think that oil prices would be spiking up higher. They're not. All right. Another thing here is that my Twitter feed, I don't have a lot of data to go over. I get a lot of my data off of people I follow on Twitter that have really good data. My Twitter feed is just literally loaded with these woke progressive, I think they're bots by and large. I've gone in to take a look at how many followers they have, when their accounts were activated. Some of them have some decent counts here. So I'm not sure what's going on here, but every single post is just purely pro Camilla. And look at this. I don't follow these people. I never follow these people, but they're all over my feed. All pro Camilla. And you know they're bots. So things are going to get real, man. There's a lot of desperation out there. She's in a lot of trouble with this hurricane issue down in the Carolinas. Granted, the Carolinas, North Carolina is a slim margin of victory for both of them. It's a swing state. The problem is that while she may capture North Carolina because most of those areas that were hurt were Trump areas, a lot of people around the country are looking at them and the administration saying, "Are you out of your effing mind? You're sending them $750, yet thousands upon thousands are going to illegal migrants and more money going over to Ukraine, and again more money over to the Middle East, and you're leaving these poor people left to fend for themselves." And it's really just a tragedy what's become of this country. I don't want to get this into a crybaby fest here, but they don't care. They just don't care about the American people. Simple as that. Nothing could be more evident. So let's talk about last week and why I switched my tone from bearish to bullish, and we need to be able to not go on and pretend that we weren't bearish and now we've always been bullish. That's not what we do here. That's not what we do. I started the Contrarian Trader in 2005. In internet terms, that's an eternity. It's been a long time. So the way I did that was by being straightforward. Always, if I'm wrong, I say it. And what's the next thing we're going to do? So we had every reason in the world a couple of weeks ago to think that we may be putting in, here's the S&P 500, triple Qs here, IWM here, bonds here. A couple of weeks ago, it looked as though we were going to go to the south side because September is usually seasonally weak, the worst month out of the year, and October. So we had good reason to think that we were going to get followed through to the downside. It didn't happen. So we allowed some consolidation here. These are weekly charts. But then we got a breakout on a daily time frame on the S&P 500 and the triple Qs. We had broken out back here on the week of the 16th on the SPY, did a retest here, follow through last week. Fast forward to the triple Qs, we broke out on September the 23rd. We pulled back. What do? We reversed to close higher. These are retests and successful retests. I do not ignore that. I preach that that's what you should be looking for before you put on a long trade. So what am I going to do? I'm going to fight the potential trend here. Not going to do it. Not going to happen. So when you take a look at the IWM, however, and this is why I'm kind of surprised, Russell 2000 just broke down. I knew it was going to, because yields are moving up higher. And small caps do not like that. Rounding top, moving lower. Let's just check in with the NQ at current, see if there's any follow through to that. No, it's still positive. Coming off of its highs, though, to be fair. All right, so when you take a look at these charts on a, before we go to the daily charts, when you take a look at the TLT, when the TLT, this is the 20-year bond ETF, when this is dropping, that means that yields are rising. You don't want to own small caps when yields are going up. You want to own small caps when yields are going down. So TLT broke support last week. I'm expecting a check back this week. We may get a pullback on yields, probably on the dollar. Then we got to see which way is this going to go. Do we get a continuation breakout on yields, or does the TLT roll over? Well, that's the same thing. Let me rephrase. TLT, do we get a check back to support prior resistance, resistance prior support? I didn't even have a lot of caffeine today. And do we get follow through to the downside? That means yields go up. You do not want small caps. Now, what if we manage to recapture this support level? That means that yields are moving lower, and you want to own the small caps, assuming that the overall market sentiment is still bullish. So right now, going to the new trading week, bullish on the market, short term, longer term, nothing's changed. Nothing has changed. And we're going to talk about the jobs data in a moment that was supposed to be the saving grace for the equity markets. I said I was going to go over the daily charts here. And folks, we're using TrendSpider, automated technical analysis. If you're not using TrendSpider, folks, you're missing out on automated trend lines, pattern recognition, scans, back testing. I mean, the list goes on and on and on. I have a 35% discount code below, and I believe in it so much that I give it away free to our silver and gold level members. So link below, sign up for either the Contrarian Trader, and get your 14-day free trial offer. Now, with TrendSpider, they no longer have a 7-day free trial offer. So you would have to sign up with them right away, but they have a money-back guarantee, I believe. So either way, you're always going to be in good hands with making sure that you are satisfied with your purchase. So let's get to the daily charts. So here's the daily chart breakout on the SPY, the daily chart breakout on the triple Qs. What am I going to do? Add to shorts? No, can't do it. So right now we are on the bull camp, but I will pivot in a heartbeat. Just as I pivoted on Friday, I'll pivot on Tuesday. I do not care. We have no emotion in this fight. It's just a matter of price, what our price is doing. If they're breaking out to new all-time highs, what am I going to do? I'm not going to fight it. Let's talk about other reasons why the market may press up before I go into some reasons why you still need to be very concerned about this market. Global liquidity entering a bullish phase in a long-term cycle. True. The Treasury has been pumping money into the system all the while that Fed Chair Powell has been reducing the size of his balance sheet and raising interest rates. Now the Chinese have joined in on the fun. So yeah, global liquidity is moving up higher. What's that going to do? It's going to cause assets to appreciate. But that's also known as, guess what? Inflation. Inflation. Look at gold. Look at silver. Look at palladium. Look at platinum. Look at copper tonight. They're all moving up higher. What are they telling you? Inflation. So anybody that says it's not inflation, they don't know what they're talking about. The fact that the stock market is breaking out with a multiple at current near 37 handle on the Schiller PE ratio, that's pretty expensive. It's been more expensive in the past, back in 2000, back in 2020, but right now we're in that range where bad things could occur very, very quickly. But right now, it's a snapshot in time. The charts look good. We got to go with the flow. Go with the flow. We'll go along. And I have a bunch of stocks that I like going into the no trading week. 5 of them, including an ETF, because I'm loving the software space. IGV, if you want a software ETF, looking very, very good. Let's talk about the economic data coming out this week. First, before we go into that, let's say hello to folks. We don't want to be rude. We don't want to be rude to our friends. Michael Anthony, welcome. So which stocks do you own? You got to join. You got to join up. I have a portfolio. Nabob, by the way, NEY. You got to put that in the. You got to go to this forum, Mike. I can't track them. Hey, okay. Was that a symbol, Nay? I cut the top of my finger about 30 minutes ago. All right. I'm sorry, man. But thank you for sharing. I'm glad that you feel comfortable enough to share that information with us. That's awesome. I'm still trying to get familiar with TrendSpider. They have good help and videos online to teach you. Yeah, they do. I mean, the tech support is outstanding. I know the owner there. His name is Dan, and he's all about customer service. Customer service. As I was mentioning, the multiples going into the new trading week, we're near 37 handle. This is not a cheap market. So, you're going to hear a lot of people out there that preach that price is everything. And it is. Price is everything. But you need to be prepared and have a plan because, every single time that the market is buckled, it's always been we're just off of all-time highs. It's always that way. So simply because there's clear blue skies above on the S&P 500 doesn't mean that bad things can't happen. Does it mean that we, in all probability, the path of least resistance is higher? Yes. But there are issues out there in this economy. And right now, I think that you're looking at fraudulent data. And we're going to talk about that more in a moment. When I talk about data, I'm talking about non-farm payrolls. Buffett indicator. We remain strongly overvalued. Folks, if you're worried about price, look at the price of the Buffett indicator. Technically not a price, I know, but it is an indicator. And we are trading above a 2 standard deviation move. It's only happened a few times in the history going back to 1950. Here. That's only a few years over the course of, I wasn't even born back here. So it's a long time. So we're bullish short term, but ready to pivot bearish at any moment. What do I have up here? Okay, good. Good news. 8 of 11 S&P 500 sectors are expected to report year-over-year earnings growth for Q3 2024, led by Infotech sector at 15.2% growth. So, would I buy the market based on an expectation? No. What I'll be watching for is a failure to meet the expectations. So that's a pretty high hurdle to overcome. That you're going to get 15.2% earnings growth. So we'll see what happens. But right now, the probabilities of earnings growth in the S&P 500 look fairly solid. Now, looking at the jobs data, I want to talk about that report that came out on Friday, which caused the markets to break out. Now, usually the equity markets, they sell off on really good news. But in this case here, the FedWatch tool is still pricing in a rate cut, but now of only 95.6%. So we were at 100% for several weeks. Now we are now down at 95.6%. So the probabilities are still strong. However, this coming week we have, I skipped over this, we have inflation data coming out, which could really cause the markets a bit of hurt. So the markets will rally right now in anticipation of a quarter basis point cut in November, as long as that probability remains strong. But this coming week, on Thursday, we get the consumer price index that comes out. Do we get the PPI this week? Yeah, we get the PPI that comes out on Friday. So these are important inflation numbers. The Federal Reserve says they don't look at them, but the market does. We have a bunch of Fed heads coming out. We get FOMC minutes on Wednesday. NFIB small business optimism coming out on Tuesday. Tomorrow, not much happens. So this gives the stock market a runway to move up higher. Even Tuesday, the large caps don't care about the small caps. Small caps can only be affected by this. Wednesday, I think they're going to pump this market up until 2 o'clock on Wednesday. We'll see what happens after those Fed minutes are released. So back to the Fed Watch tool. We were at a high probability a week ago of a 50 basis point cut. Now it's only a quarter basis point. Will the markets be satisfied with this? That's the big question. So let's take a look at what was behind the drop in the probability of a 50 basis point cut and the now potential possibility of a pause, which was non-existent. We had the non-farm payrolls, which I call the pimp Mac Daddy of all economic data reports that came out on Friday. So let's just scroll through this. I'm not going to read the whole thing. So we know we had a beat. So it's going to skip the drop in unemployment. The one fly in the ointment was the jump in wage growth. And you may be saying, stop there, Bob. What are you talking about? People are getting paid more. That's a great thing. I agree with you. That's a great thing. I want my fellow Americans to make more money. Great. The Federal Reserve does not, because that's inflationary to them. Wage growth, which strongly hinted that inflation is also back, just as we have been warning for months, especially now that oil is once again surging. And we will cross that bridge eventually, but not yet. Let's focus on the parts of the job report which the BLS has traditionally used to mask headline weakness, such as part-time workers used to mask weakness in full-time jobs, or foreign-born workers surging to the expense of native-born. Well, this month there was little of that as well. True, that anomaly wasn't around. And in fact, part-time workers dropped modestly as full-time workers rose. Good stuff. Good stuff. And here's the chart. For the longest time, ever since, oddly enough, the regime got into office, foreign-born workers have been getting jobs more so than native-born workers. You decide. Continuing on. It didn't take long to find what the BLS did this time to make jobs appear much stronger than expected. A political imperative for the highly politicized agency that tasked with making Kamala Biden economy appear stronger than it was exactly 1 month ahead of the election. I warned of this. I warned of this, that they were going to have to juice the non-farm payrolls for last month because people are already voting. They needed to do it now to get it out there while people are beginning to vote. Next month, after the election, when you get the revisions, you may get some significant revisions down in this report, and I'll share with you why in a moment. The answer, ironically, was in the number of government workers, which exploded higher. Folks, I don't want to disparage government workers, okay? But when it comes down to productivity, they don't produce anything. I'm sorry. The military has a purpose. They don't produce anything. They produce bills. Their deterrent produces safety, which allows for economic growth. I can buy into that argument. I said I support the military. Most other agencies produce nothing. And I don't mean to insult people, but it's a fact. If anything, they strangle the economy. Let's getting back. And we are not only instrumental in pushing the household survey print much higher, but meant the difference between a 4.1% and a 4.5% unemployment rate. Here's what happened. In September, the number of government workers as tracked by the household survey. Household survey is a fairly legitimate report, soared by 785,000. That's an astonishing number. From 21.421 million to 22.216 million, both seasonally adjusted. This was the biggest monthly surge in government workers in history. Now they're going to exclude here COVID. So I guess they did some layoffs or what do you call them? Leaves of absence, and they came back. So you had a bigger resurgence back here, but people are going back to work. So this is the biggest spike on record ex-COVID. Tell me this wasn't political. It's remarkable to see a 1 month 3% jump in government jobs. Perhaps these are all hall monitors for the polling booths. It could be quite possible. Or perhaps, and this is why I said earlier, expect revisions next month. Or perhaps these numbers are just wishful thinking. Now, the household survey, I'm gonna part with the writer of this good report, because the household survey is generally a pretty honest approach, unless the regime got to them as well. It's usually the establishment survey that is a false read. So either way, you can expect revisions. One thing is certain, the Fed gets a hall pass next month when the ugly post-hurricane numbers come out. It's going to be horrific. Curiously, it wasn't the household survey that tracked an unprecedented increase in government workers. If one takes the establishment survey unadjusted, now here's where it gets crooked. One sees the exact same thing. Here, the number of not seasonally adjusted workers soared by 918,000 jobs. So the household survey, 745,000 jobs, which is bananas. The establishment survey, which the establishment rigged, rose by 918,000. So here's the real crazy part. While the number of not seasonally adjusted private worker sectors plunged by 458,000 jobs. Think about it. X addition of government workers last month, jobs would have plunged. You can't make this up. The level of criminality is just astonishing. So I'm going to talk all you want about stocks moving up higher, but all the while, you had better not be forgetting the reality of this market is built on a house of cards. And when it goes, it's going to go big. They are pumping a lot of air into this balloon. Now, these are my charts. Here's what I like to do to validate what the government is telling us. This is the Chicago Fed National Activity Index. It's a 3-month moving average. So it's not a 1-month view. It's a 3-month moving average. Take note of the gray areas. Gray areas are recession. What happens to the Chicago Fed National Activity Index immediately prior to recession? It goes negative. Here, 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 here. Oh, oddly enough, we've been below it since July of 2022. July of 2022, this index has been negative. Nobody talks about it. Go through CNBC for the past month. Had they mentioned this once? I doubt it. The unemployment rate. This is the U3 number. Here's the difference between the U3 and the U6. U3 versus U6 unemployment rate overview. The U3 unemployment rate is the most commonly reported rate in the United States, representing the number of unemployed people actively seeking a job. Actively seeking a job. The U6 rate covers discouraged workers, underemployed, and unemployed, workers in the country. This used to be, the U6 used to be the U3, the standard reported unemployment rate for the country until like the mid-1990s. They didn't like it. It wasn't helping government. So what did they do? They changed it to the U3 report, making it much more favorable for the government in charge. So the U3 report shows a 4.1% unemployment rate, and it is hooking up. But the U6 report, we're at 7.7% unemployment. 7.7% real unemployment in this country, and they don't want to talk about it. And the problem is that it's going up. The trend is up. So you expect me to believe this report that was put out on Friday? No way. I think it's an opportunity because a lot of other people, my competitors, decided that, you know what, this is great. The economy is doing great. They're going to buy the rumor. They're gonna chase this and think that we're firing on all cylinders, when in reality, it's a house of cards, folks. It's a house of cards. Not to mention that we have an uninverted yield curve. To be fair, the yield curve did pull back dramatically last week. The however is that we are still uninverted. Let's do some chart requests. And I have some charts I want to go over here as well. As I mentioned earlier, for those that are joining in or just joined in, if you just joined in, please like, subscribe, you know the deal, and join our free forum. You can see we have a lot of people joining up here. And when you do join, use this link, send it over to your friends, and have them join up. And the first person to get up to a gold level member gets 6 months of TrendSpider for free. So get those referrals coming in. And what else? Oh, in the TrendSpider space, under home or in chat, you have my scan using TrendSpider, 35% discount below using that link, or I give it away free to silver and gold level members. Use the software scan. I have some really great scans that are charts that are setting up there that are Bollinger Band squeezes. It's a weekly view as of 10/5. I also pulled out a scan of the S&P 500 stocks that are in Bollinger Band squeezes. These are very high probability setups. So I have a few of them I'm going to talk about. Some of these you may like better than I did. So head on over. These are free, and look it up whenever you get a chance. How do we get BlackRock and Vanguard to back off of DEI, ESG, since they invest into everyone? Well, you have Robbie Starbuck that is out there. He's on Twitter if you want to look him up. He's doing a really phenomenal job of attacking these companies and threatening them with boycotts, and they're backing off. I think that there needs to be legislation put in there about so much institutional ownership of the overall stock market. It's not going to happen under a Democratic administration. And honestly, with the Republicans being, straw man, the controlled opposition in Congress, I don't have much hope for them passing hard legislation to rein in these cartels. That's what they are, banking cartels. And you'd hope. But right now you need to attack each individual company on its own policy. And a number of them, I mean, Caterpillar, a number of these stocks, head over to Starbucks channel. I don't know what it is. They would just type in his name and you'll find his feed. And a lot of big companies backed off. As a matter of fact, one company, I forget what it was. I think it was a retailer, found out that he was possibly going to talk about them. They got in front of it. They changed their entire DEI program and backed it off completely. It doesn't exist anymore. Yeah, he's doing a great job. Shout out to Robbie Starbuck. Definitely follow him. He's doing great work out there. Bob, how do you invest in companies because you think that CAG, HRL, KHC, and CAB would be safe? Everyone must eat their food. So that's what you call, those are what you call staples, consumer staples. They trend like anything else. Consumer staples were one of the worst performing sectors last week. They broke down in a weekly time frame. 2 weeks ago, they did a retest. The week prior to last week, follow through to the downside. That sector is going lower. So you can't buy stocks based upon what people must have. You must take a look at the price action. What is it doing? Have earnings caught up to the share price, or has the share price exceeded the expected earnings, and is the sector over their skis at current? So you can't. You need to take a more holistic view of any one sector. You can't just say that people need to eat. They're not going to go out of business. They're going to pay their dividends. They're going to do just fine. But that doesn't necessarily mean that they're valued more simply because people have to eat. There are competitors out there that run a more efficient business or that sell products that have wider margins. So you always have your winners, losers, fat cats, and skinny dogs. So that's my take. All right, let's go over some charts here. Oh, there's more comments here. Yeah, I saw that. We're going over the video today. I believe it's on our list. It is on our list. So the symbols that I like going into the new trading week, 5 of them are on the video I posted yesterday on YouTube. I posted it on the website. If you're on the blog, you're watching this, or on Twitter. It's posted there. Go watch it at your leisure. But I came up with another scan, as I have here, the S&P 500 scan. I ran it through TrendSpider yesterday. Again, 35% discount code. Link below if you're on the forum, right here. Just use that link and head on over. You can take a tour and whatnot. So here is our chart going into the new trading week. And this is one ETF that I really, really love. And this is the IGV, the software sector ETF. This is a cap-weighted, not an equal-weighted basket of stocks. So just be aware of that. Now, the seasonality here is just awesome. The month of October is the best month out of the year for the IGV. So I plan on opening a position here, probably my long-term portfolio, as soon as this coming week. I'm expecting a pullback and a retest of support. Ideally, we get that. I did not post the price targets, stop loss points, or entry points in the members area yet. I will do that tonight. I promised I did that. I would do that. I will do it tonight. I will also do it for these stocks. They will be in the members area tonight. So go check it out, members. So IGV looking very, very good here. Seasonality looking good, very good. And on a relative basis, you may not be able to appreciate the seasonality here. The month of October, it's up 71%. Let's compare that to QQQ. It's up only 62% of the time in October. So what do you want to own? Qs or the seasonally favorable software space? I'm gonna go with technically I'll be going with both, but I'm gonna be opening up a position on the software space as well. Now, looking at the charts that I came up with on the S&P 500, AIG, a bunch of insurance companies popped up on my screen. AIG is a widely diversified carrier, so that's why I like them. And you could see that what we have here is in red, you have your Bollinger Bands. In green, you have your Keltner channels, a Bollinger Band squeeze. That is what I filtered for in this doc. This is all setups that look like this on a weekly time frame. So what did we do last week? We broke out. Beautiful. Gotta love it. We have a higher low. And I do send out alerts to all our members on these when we enter, add, or get out. Daily view. Daily view. What's wrong with this candlestick? It's perfect. We have a Bollinger Band squeeze on a daily, weekly chart. So AIG looking awesome. Awesome. CSX, railroad. Here's the weekly chart. Look at the bottleneck here. Very, very tight Bollinger Band squeeze, setting up for a possible breakout. The daily chart. And for those folks not familiar with what a Bollinger Band squeeze, and the context is I use that term. Sometimes I'll call it a contrarian squeeze. Generally, let's go back to the weekly chart. Generally, the Bollinger Bands trade outside of the Keltner channels. That changes when you get into a consolidation. And when the Bollinger Bands float inside of the Keltner channels, what that means is that price is not moving all that much. You have a tug of war going on between bulls and bears. And the longer, in this case here, we went into a bit of a bear market. We began to consolidate. We put in a higher low. And now we've been stair-stepping up higher. So now you have a big tug of war that's built up over the course of time. And a lot of shorts are out there saying, you know what, I can't be short of this anymore. I know it's going to happen. And a lot of times you don't get shorts that know it's going to happen because they're asleep at the switch. So I think that this is probably going to break out higher. I'm loving this setup here. The daily chart is a little bit sloppy in that it failed to break out yesterday. So I'm going to want to look at the breakout. Members, more to come on this potential trade. Next chart up, NVIDIA. Weekly chart, another Bollinger Band squeeze and a breakout last week. We broke out above resistance, daily view. Beautiful. I think this is the only tech stock that I have on my list. Yeah, it's the only one I have on my list. Very rare. So NVIDIA breaking out. What's not to like here? Devon Energy. Devon Energy has a very large short interest. And what did this do last week? It broke out. Broke out. Beautiful. So we've been in a downtrend. And technically, that has not changed. We remain in a downtrend. The however is that we stopped going down. We are consolidating sideways. And now we have broken back out and above what was resistance here, here, and here. This must now act as support. If it doesn't, if we fail to hold this support level, I'm not interested. It's going lower. But at current, we're looking at this from the view of we have a weekly breakout and a Bollinger Band squeeze, weekly time frame. We also have one on a daily time frame. This looks awesome to me. So to me, Devon Energy, short squeeze candidate, great swing trade candidate. Again, I send out alerts to members when we enter, exit, and add to positions. Is that it? Did I go over everything? I have a bunch on here, but I wanted to cover a few of them. DFS, I did not cover. I posted the link on Stock Twits. And if you post a link that you're going to talk about it on a live stream and you don't talk about it, they get mad at you. So I know them over there and I have a good relationship, Howard Linson, and I do not want them mad at me. So Discover Card Services. The financials did outstanding last week. Outstanding. And DFS, Discover Financial Services, looked like the best chart for me. I was looking at Goldman Sachs. Goldman Sachs is a Bollinger Band squeeze as well. However, it has overhead supply. If you give me a stock that has a similar setup, but one has overhead supply, meaning we have buyers above looking to get made whole, or we have one that is at all-time highs and has the same chart pattern, I'm going with that one because I don't have to worry about anybody selling into strength. Unless, of course, you have somebody profit taking, but it's not going to happen right now because this is a very, very nice base of which we broke out last week on Discover. Take note of the higher lows. These are the patterns that you want to take a look at. This is over in Italy. This is what I'd be doing right now. I would be having a Aperol Spritz and doing to this chart. Absolutely. Beautiful chart, daily view. Beautiful breakout on Friday. Momentum is measured by Stokes, higher lows, higher highs, bullish. Okay, let's do some chart requests. I got to make sure I don't forget anybody. Franklin, you have nothing? Oh, yeah, Franklin does have some. Okay, good. I skipped Franklin the other day, and I feel bad. So I got to make sure that can never happen. Not with Franklin. Okay, so we have Cal-Maine Foods, Great Egg Company, Bonnie Bean, GDX, NBR, SoFi, DBC. That is an ag ETF. It is a cap-weighted ETF weighted mostly by coffee and cocoa. So be careful of that one. But we will check it out. Gary, Meta. All right, everything's consolidated. It helps me out. Thanks for folks for posting there. And for those that joined up this evening, welcome aboard. Please make sure, head on over to the Bulls and Bear Banter. Look at this. Donnie over in Greece, handsome man, lovely lady that he's with. I'm going to assume that's his wife. And let's get to the request. CALM. Monster. Wow, what a move. I sold this. God damn it. Damn it. Okay. Yeah, so would I buy it here? No, I wouldn't buy it here. It doesn't mean it's not going up. I just would initiate a new trade. Sean, if you're still long of these shares from when we owned it, bravo. You are a better man than me when it comes down to this stock. And probably a lot more other ways. But it's very, very extended. So let's flip this to a 3 standard. Bollinger Band. there's more upside that you could get that could be had here. And I think that we are at all-time highs. I think. Yeah. Monster. I'd be a seller here. Goddamn. You know what? I'd be booking profits here. I mean, we just blew through. Their earnings were not good. And I didn't take a look at the earnings report, but I remember they were reported, and I was listening it on Bloomberg. Yet the share price was moving up when I heard it on the radio. So their guidance must look pretty good. They must have disappointed on EPS or revenues or both, but their forward-looking guidance must be pretty good. So Cal-Maine, very, very extended here, Sean. On a daily chart, you are way up and above the third standard deviation Bollinger Band. I would not short this stock. It's a very low float stock, and it will rip your face off. Do not short this stock. I beg of you, don't do it. GDX. Yeah, so I think that a couple of things here. One, the GDX is very sensitive to the US dollar. And the US dollar gapped up and into the third standard deviation Bollinger Band on Friday. And it's extended. So while I'm not happy with the performance at current, meaning the past couple of days, over the past couple of years, we've done great with NUGT and GDXJ, the junior miners. The GDX are the senior miners. The however here is that any rally may be short-lived because we broke support on Friday. Let's go to the weekly chart. We even broke weekly support here. So I think what we need to do is take a step back and say, okay, where is support? There are several areas of support here. If you're a Fibonacci guy, you can just click a button here and get your automated Fibonacci's. Now, where do we bounce last week? Right off of this Fibonacci retracement here. Now, if it fails, we're probably coming down here to around 37.03. I'd be looking at that price point as a level at which to add or open a position. So I would wait on this trade, even if we rally this coming week, because we broke down last week. I would expect a pullback and a retest of what was support should now act as resistance, unless, of course, the dollar just drops like a rock. Then it's game back on with the gold mining stocks. But they've come a long way, and we've done very, very well with them. I don't want to chase them here. They are at the mid-range of the trading range. They're due for a retracement back down to the lower band. It's all part of the bull market. It's good stuff. Longer term, I remain very, very bullish on the gold mining stocks. NBR. Is this Neighbors? Yep. I haven't lost it. Not yet, anyway. Okay, weekly chart, Neighbors Industries. So I believe Neighbors is in the energy space. That was improperly drawn. That's why I need my automated trend lines. Boom, baby. There we go. I want to make sure I don't want to remove one of the automated ones. Okay. So Neighbors, did it break out? Not quite. Not quite a breakout last week, but close. But we're not playing horseshoes here. We want to see a breakout on Neighbors weekly chart. Stokes are beginning to hook up. Daily chart. Nice little rally last week, but let's overlay the weekly resistance levels onto the daily chart. I got to get rid of the data. Hold on one second. Okay. So you can see here on a daily chart, I have in solid line the daily support and resistance levels. In dashed line overlaid are the weekly support and resistance levels. Great tool, great functionality. So we can conclude by looking at these charts, we can't buy this stock yet because while it's a beautiful weekly, or not a beautiful weekly chart, it's a beautiful daily chart, the beginning of a nice base on a weekly chart, we still haven't broken out. We'd be buying into resistance. We should have been thinking about buying this stock back here when it broke out, pulled back, did a retest almost, and then got some follow through. Shorts recovering. I would not buy this stock yet. Not quite yet. I would wait for a weekly close above resistance at or around 81.50. And I would just nibble. Because remember, the next week it's probably going to retest that support level again. So if it closes above this resistance level, why do you want to buy your entire position? It may not hold the following week. So buy a little, scratch the itch. You got your toe in the water. Great stuff. Next week, the discipline is wait for a retest, wait for the follow through. Do we make a new weekly higher high? That's what you want to look out for. SoFi. Let's clean this up a little bit. We're going to start with the weekly chart. SoFi is looking really, really good. You have a really nice long-term base. We spoke about this one a few weeks ago. I drew this descending wedge formation, and we broke out. Right? So we broke out, did a retest, rally, pulled back, and followed through to the upside. So we went from being in a bear market to then putting in higher lows, higher highs, and it looks as though we're going up. And the financials are looking very, very good. So bullish on SoFi. Let's go to a daily view here. Sean. Trying to get, yeah, you know what? The staples are pulling back right now. You may get an opportunity. I mean, it's overbought. You know that. We're talking about Cal-Maine Foods here, folks. So the discipline is wait for that pullback. You know that you owned it with me. So you know the pullbacks are vicious. So wait for that vicious pullback. You're going to get it. You know you are. And then step back in. So nice breakout on Friday on SoFi. Look for a retest of $8.15. I'd be a buyer at that price point. Add more on a breakout to a new weekly higher high. DBC for Franklin. Again, this is a agriculture stock, but it also has livestock in it as well, and it's market cap weighted, with cocoa and coffee being the two largest components. That being said, let's go to a weekly chart, see what we got here. We've broken out on a weekly chart. We're trading above the 8-period moving average in yellow. We have a higher low on momentum, and we also have a higher high. What does all that mean? What it means is that price is still a concern because while we have broken out, we remain in a downtrend channel. Right? That has not changed. In fact, we closed right at the upper band of that downtrend channel last week. Now, momentum as measured by the stochastics are telling you the shares are under accumulation on a weekly time frame. So that's quite bullish. They're not above 50 yet. This dotted line would mark a rise and a close above a neutral level, and I become far more bullish on a breakout above that level on Stokes and a breakout above resistance on price. I'm not a buyer here yet. And when you take a look at names like CalMaine, while that is not a big component at all of this ag ETF, you want to take a look at the charts of cocoa and coffee. How are those? That's my Brooklyn accent coming in. Coffee. Let me try to do it as a Midwesterner. Coffee. You want to take a look at those charts individually. If they look good, if it appears as though they're continuing to put in higher lows and higher highs, then I'd be looking at DBC as a long trade. But if they're kind of floundering, if they stop going up, if they're stalling, if they're extended, walk away. Walk away. DBC is the contract. Oh, DBC. I'm sorry. I'm thinking DBA because you always ask me about that. I'm sorry, Franklin. I screwed up. Thank you for correcting me. We're talking about DBC, not DBA. Okay. Franklin and I always talk about DBA. You threw me a curveball there, but I'm a professional. I'm supposed to be a professional at this stuff. I need to be able to recover from these embarrassing moments. I'll take a sip of water. Pause, think up with something witty to say. Let me do that. Okay. I have nothing witty to say. I have a banker's mind. I have nothing witty to say. Okay, so DBC, completely different product. Anything I said about cocoa, livestock, or coffee, take it and throw it out the window. It doesn't matter. However, the analysis of the chart remains unchanged. I don't care if you're looking at DBC, DBA, SPY, the chart of cupcakes, it doesn't matter. It's the same rinse, wash, repeat. So the chart is developing. And now that you're saying that this is the DBC, I would want to take a look at this. And it's probably a cap-weighted index, meaning that there's a few commodities in there that are driving it up higher. In fact, let's satisfy the curiosity of the folks out there. Let's see if I can bring this up. Unless, Franklin, do you know the weighting here? All right, so I'll bring this over and I'll share it with everyone. Okay, so the DBC, top positions. Top position is short-term government debt. Second largest position is short-term government debt. You know, that being a yardstick, I'm not, what the heck happened here? I don't know. It says here, light sweet crude. I don't know what the weighting is. They got to give me the weighting. All right, the fund pursues its investment strategy, light sweet crude. This is worthless to me. I don't know the weighting here. Light sweet crude, unless it's an equal weighted fund. You know, you may be saying, why is this guy wasting his time looking this stuff up? The reason is that you need to know what you're buying. Here we go. DBC Invesco Commodity Index. All right, so Yahoo Finance appears to be wrong. DBC gasoline rose over 8% last week. Crude prices rose last week. So gasoline is nearly 13% of the portfolio. Brent crude is 12.5. West Texas Intermediate So the largest component of this basket is clearly oil. Different brands of oil, but oil nonetheless. Natural gas, 3.3. I don't know what ULSD is, so you're going to have to forgive me on that. So as goes oil and its distillates, so goes DBC. So oil had a good week last week. It's pulling back at the open here. That doesn't mean it's going to close down on the week. So this could quite possibly break out. Daily view. Yeah, we hit that resistance level last week. I would wait for a pullback here on DBC. What else do we have? Leaving it off with Meta. I'm about to lose my voice. Oh, boy. Thank you for this, Jay. Iran cancels all airline flights from Toronto into tomorrow a.m. Oh, no, I misread that. From tonight into tomorrow. I thought you meant, I read it as Toronto. Wow, that's a problem. Let's see how the futures are reacting. We'll come back to Meta in a moment. NQ is pulled back a little bit off its highs. Last time we looked at it, it was up 0.11%, now up 0.07%. Dow has pulled back a bit here. We're going to take a look at crude prices in a moment. RUT is still positive, but it's giving up a lot of those gains. Crude remains down, but it's off of its lows. Are we putting in a higher low? We'll watch it. This is now a 15-minute chart. I want to know now if we put in a higher high. If oil begins to spike up, stocks are going to drop because that's a validation of fears that are out there. You're welcome, Franklin. Thank you very much. Yeah, I hope people got some value out of that. Yep, thank you. Yeah, so going back to Franklin's point here. So as I was mentioning with the DBA, watch out for these funds. A lot of them are weighted towards, in the case of the DBA Ag Fund, more towards cocoa and coffee. In this case here, with the DBC, we know that it's weighted towards oil and distillates, gasoline. So if they fail to move up higher, well, therefore, that means that the fund is not going to move up higher. It can't. It's like having an anchor around its ankles. Every other component can move up higher. The problem is that the biggest weightings are laggards. They're lagging and weighing down the fund. So just be careful of the products that you're buying, these ETFs. Know whether or not they're market cap, meaning every stock in that fund has the same influence on that fund as does the other stock, even if it's a $50 billion company relative to a $20 billion company. Now, a market cap stock or a market cap fund, they're going to put more money or more weighting on the bigger cap names. So just be careful. Know your product that you're buying. Let's wrap it up with Meta. I like the contrarian trade of public forum working together with the lives. Cool. I'm glad. Thank you very much. Enjoy. And please, folks, when you're going in there, you're joining up, please say hello. Say hello. I beg of you. And remember, refer a friend. Let's go to Meta. Okay, so Meta weekly chart first. So we broke out slightly back here, retested the week before last week, follow through. It wants to go up. Daily chart, it wants to go up. So where does it go from here? You know, forget about the daily chart. Let's go to the weekly chart. I think this still goes up higher. This is going up a lot higher. We closed above monthly resistance last month. Gosh damn it. Let's put up the monthly resistance levels, see whether or not TrendSpider can pick it up. It can. That's the automated trend lines, folks. This is where it's going. God damn it. Right up here to about 610.58 per share. So bullish on Meta. So folks, don't forget, TrendSpider 35% discount code. You can see what you get here with the product. I give it away free to members of the Contrarian Trader at the silver and gold level membership levels. There's also a lower price titanium level. So sign up either for the 14-day free trial offer with me. If you're not ready, that's fine. At least join the public forum here. Make sure that when you join, you refer a friend using this link. First one that gets gold gets 6 months free to TrendSpider, and you get access to our chat room. And Donnie, if you're out there, if you watch this from Greece, have an awesome time, pal. Enjoy. I'm sure it's beautiful. Folks, everybody have a profitable trading week. Thank you for being here. I really appreciate you spending time with me. I am honored. And everybody have an awesome night and a profitable trading week. I'll talk to you soon.